Hey warriors, I hope you're all doing great. This is your friend RAHUL Agarwal and I'm here with the final video of your assignment series which we have been shooting for CA Inter paper number 3A direct taxation for your May 26th, September 26th and Jan 27th. I am really hoping that you've already completed the last 7 assignments along with me and I've already got a good boost of confidence on how your preparation of your CA Inter examination should be. If you have not, please complete those assignments before you come to this one because this one is an extremely important one. We are at the assignment number 8, your PGBP and comprehensive questions. The question which comes as a part of your question number 1 for about 15 marks in your examination. The one question which is going to be the most difficult one, but at the same time is going to make and break your attempt for your examinations. Now, I also do want to clarify a few things before I take you forward to the assignments. Is one, when it comes to question number 1, this is something I've always told in my class as well, that question number 1 is impossible to complete in the examination and therefore should always be the last thing that you're attempting. That is why even Rahul Bhaiya has put this in the last time. I am not discussing this in the first course because I don't want you to have the impression that this question is solvable. Understand, question may not be difficult, but it is time consuming. Spending way too much time on a 15-mark question and losing everything else in the 85 is not the strategy you should follow. So yes, this question is always to be attempted in the last, which means it may be possible that sometimes you may not complete the question. Completely fine with that. Don't worry about it because it's not something you should anyway complete off. Even if you try your level best, there will always be 1 or 2 adjustments which ICI will try to complicate for you. And therefore, the chances of you getting a complete 15 on 15 is remote. I'm not saying impossible, but definitely remote. And so it is important that you realize that this question is only for you to grab more marks. The more and more you can attempt, the more and more marks you get. That is the only intention with which you should do this question off. Second, since this is a 15-mark question, it is very obvious that you will also realize that every question is going to take a lot of time if Rahul Bhaiya sits with you and solves it like we have done the previous assignments. It is not going to happen. We are not going to be able to spend 40 minutes on each question just to explain with each other and then write down the adjustments. It's going to take a lot of time from me, and therefore it's important that you do one thing. You first take this assignment yourself, complete it from your side, and then sit on this video to review and understand if what you have thought and what I have told is right or not. Yes, that is one request which I'm going to make in this video, which means if you're opening up this YouTube video right now thinking Rahul Bhaiya is telling me what to do, so I will just note down here and or stop the video right away, go back, complete the assignment once from your side, then come back and look at this video. You will have a better grip on the chapter because that is more important. Now, it may happen that you may not know an adjustment. That's completely fine. Just leave that line and move forward. That adjustment you can discuss along with me. But that does not mean that Rahul, the complete question I'll work along with you. No, you're not going to learn something better from there, people. We're doing this assignment series to make you a ranker, and ranker learns to do it himself. Do that. 3. This is a 11 question assignment with 40 minutes on each question, which means I need to spend a good amount of time to explain each question one by one. It may not humanly be possible for me to complete this whole thing in 1 hour without rushing up, and I don't want to do that. So what we're going to do is, people, we're going to see how much we can complete in this 1 hour journey. In this 1 hour journey, if you're able to complete some good amount of questions, then we leave that and we continue with part number 2. Which means this video may probably get split into 2 parts just to discuss with you if you are able to manage everything in 1 hour or not. So let's keep that in mind and let's proceed on that. Clear? Chalo. With that understanding is what we're going to look into the assignment, people. Chalo, saath mein kare. Question number 1, 15-mark questions along with some PGBP small questions that we're going to discuss together. Yes? Chalo. Question number 1. Not a compulsory question. Came in question number 3B as an MTP question. MTP number 1 Jan 26 is basically asking this question to you. What does the question say? It says, Sarthak is in the business of operating goods vehicle. I saw goods vehicle and I confirmed it to you. This is question of presumptive taxation. On 1st April 2025, the following vehicle data are given to you. The last line says you're required to compute income under 44A. Presumptive taxation has been questioned to you. So presumptive taxation rules. What is presumptive taxation rules, my friends? Presumptive taxation rules basically come and say that when it is coming to presumptive taxation, there are some rules to be followed. 1. You should not own more than 10 vehicles. Looking at the facts, I have 1, 2, 3, 4 and 5. 5 vehicles, satisfied condition. Second, I should be classifying my vehicles into 2 buckets. One is called light good vehicles, one is called heavy good vehicles. Vehicles more than 12 ton capacity will be heavy, everything others will be light vehicles. Third, when it comes to heavy good vehicles, I'm going to tax 1000 per ton per month per vehicle for every vehicle that you are going to have in your hand without usage as well. Second, if you're going to have light good vehicles, then it is 7500 per month per vehicle for every vehicle that you have in your hand without any usage conditions. That is what we're going to keep in mind. That is what we're going to do. So first things, let's eliminate things. First, like I said, people, when it comes to presumptive taxation, put to use was never a condition itself. Put to use is a condition only for depreciation. So I am going to ignore the put to use topic here because that is not going to be relevant. My date of purchase becomes more critical. So let's work with the date of purchase. Second, let's classify your vehicles into light or heavy. I'm looking at 9,000. 9,000 becomes a light vehicle. 15,000 becomes a heavy vehicle. 12,000 exactly also becomes a light vehicle. More than 12,000 is heavy vehicle. 11,500 is a light vehicle. And 14,000 is also a light vehicle. That is what the statement is. Third, the one mistake which you end up making in examination, so be very, very careful. Question here says that the date of purchase is 2nd June 24. Now, 2nd June 24 is not your previous year, people, which means don't come and start calculating presumptive taxation from June 24 till date. Understand? That year's presumptive you would already paid that year. I only am focusing on what happens in the current year. So which means this will be assumed as there for a period of 12 months. This will be assumed to be there for a period of 12 months. This will also be assumed to be there for a period of 12 months. April to March. Very simple. Next, for the purchases which made in the current year. Look, I have made one purchase on 20th April, which is on the start of the month itself. April matlab first month, and I told you it is per month or part thereof, which means I will consider the April month completely. So I'm going to take this also as 12 months, but when it comes to the next one, this is in May. April has been ignored off, so this becomes 11 months. Simple, straightforward. With that, people, I think we can simple, straightforward answer it off. What are we going to do? For the first vehicle, we are simply going to say it is going to be 7,500 for 12 months. For the next one, we're going to say 15,000 heavy vehicle, so it is 1,000 per ton. 15,000 kgs matlab 15 tons. So it is going to be 15,000 into 12 months. Third one is going to be light vehicle, which means we are going to go 7,500 for 12 months. The next one is light good vehicle. Again, it's going to be 7,500 for 12 months. Last one is 14,000. This one I will take as it is, which means it is 14,000 for 11 months. That is what the statement is. Simple, straightforward. Multiply all the numbers, get the total. That is your presumptive income, and that is what your answer is. 4-mark question, people. 4-mark question. Worth it or not? Definitely not worth it. But okay, whatever. I am getting goose marks. I am going to work with that. Yes? Chalo. Good. Let's move to question number 2. I'm now going to start with the comprehensive questions, people. Now, Rahul Bhaiya has a special template on how we should be approaching these questions. So, Rahul Bhaiya is going to work with that. Let's work in the same fashion. If you are not clear on the concept, if you are clear on the concept, you can do it in your own fashion. But if you're not clear, Rahul, in question number 1, if I see itself, I'm very scared. I don't know how to approach it. Follow my method. Probably it will help you. Yes? Chalo. Let's read it on the same template. First, it says Mr. Ganesh is a resident and ordinary resident. I'm going to mark this, which means I'm going to clarify that this person is an ROR. Global income is going to be taxable. Second, it says the person is age 61 years. I have now confirmed the person is a senior citizen. Yes, so I'm going to keep in mind that the person is a senior citizen because that is going to help me for the future case. Next, this person is engaged in the business of manufacturing furniture. Manufacturing, if I see, I'm going to clarify that the person is going to get additional depreciation. Small things for you to note down, people. Next, he is subject to tax audit under 44AB, which means this person will be liable for TDS if at all TDS is applicable. The profit and loss information is given to you. Never read the P&L first. Always read the last line first. Let's read the last line. The last line comes and says, you're required to compute the tax liability and the total income of Ganesh for the 26-27, assuming that he wants to pay tax under 115 BAC. Person is going for DTR. Person is going for DTR. Keep that in mind. DTR rules is what is going to apply. Now, the moment I saw DTR rules, people, first and the most important thing is I will go on the top and I will say not allowed. I will say not allowed. Understand DTR scheme, no additional depreciation comes into picture, not allowed. Second thing I'm going to keep in mind is I'm going to remove this also because DTR scheme does not permit you to have a senior citizen, which means it does not matter any case. So first I noted it down, then I struck it off because it now gives me more clarity on things. It is important you do it in the same fashion. It helps you do better. Yes? Chalo. With that understanding, people, I'm going to move to the right sides. Let's understand things. When you look at P&L, I always recommend to start from the right side. The right side gives you better understanding on things because you now know what incomes are going where. So keep that in mind. Now, starting from the right side, it says my gross profit is 2,57,30,000 rupees. When you see a gross profit like this, the first question you have to ask yourself is, it is profit or is it sale? If it was a sale, then I would have probably checked for presumptive also. Here the question says profit, I have nothing to do with this, which means I am going to ignore this information because it's simply a balancing figure. Yes, so no information to be done for gross profit, let it go. Next is called winnings from lottery, net of TDS of 30%. Look carefully, it is net of TDS of 30%. So first thing you have to ask yourself is, what am I doing? Am I going to put this under PGBP? No. If I'm not going to put this under PGBP, the first things I need to do is I need to remove it from the PGBP statement. So what am I going to do? I'm going to reduce 31,500 from my PGBP statement. Correct, not correct? Yes, keep that in mind. So I'm going to reduce 31,500 from my PGBP statement because it is not part of my PGBP statement. Now this is their part of P&L, matlab it is there in my net profit. Should it be there in my net profit? No, because it should not be there in my net profit. If it was added earlier, I'm reversing it. But notice, question does not want PGBP. Question wants total income. If the question is asking for total income, I need to prepare my other statement also. So by that logic, what I'm going to do, I'm going to say take the same number and add it to the statement of IFOS. Add it to the statement of IFOS. However, notice carefully, the number of 31,500, is that my actual profit? No. It is not my actual profit because my actual profit is given as net of TDS, which means I need to figure out what is my gross profit. How do we do that? Very simple. Take 31,500 as my net number. Now this number is after TDS. Matlab TDS would have been 30%. This number is 70%. So divided by 70%, answer comes as 45,000. Which means in my IFOS statement, I will add 45,000 as an answer. Clear? Yes, be very careful about this. So 31,500 is what I'm going to reduce from my PGBP and 45,000 is what I'm going to add to my IFOS statement. I hope this was clear to everyone. Yes or no? Yes. Now one mistake which students end up making in examination is, Rahul, if you're going to add 45,000 to IFOS, then even 45,000 should be reduced from PGBP. True or false? False. Understand carefully. My PGBP, the only number I booked is 31,500. If you end up reducing 45,000, then where is the profit showing in the P&L? If the P&L itself is showing 31,500, then you can only remove 31,500 from the P&L. Clear, not clear? So be very careful on that adjustment, people. A very common adjustment in examination and a proper trap for you. Be very careful about it. Yes? Chalo, proceed forward. Next one says bad debts recovered 3 lakh rupees, part of business activity, nothing can be done. Let's leave it as it is. On the left side comes and says administrative expenses has been confirmed as 64 lakh 30, business expense, no problem. Salaries and wages is 80 lakhs, business expense, no problem. Interest on loan is 7 lakh 50, assuming loan is taken for business expense, no problem. Depreciation is 6 lakh 17, I am gonna disallow. Yes, I'm gonna disallow this as an expense under the head PGBP because I should calculate depreciation as per income tax guidelines. Keep that in mind. Next, professional fees is 12 lakh 70, normal expense. Rents and rates is 20 to 80, normal expense. Traveling and conveyance is 11 lakh 40, normal expense. Loss on sale of asset of scientific research is 2 lakh rupees. I have a loss on sale of asset from scientific research. Question number 1. First of all, this asset was used for scientific research. Current year I may have gone for DTR. Past year I would have claimed 100% deduction, which means asset cost would have technically been 0. When the asset cost is technically 0, how on earth did you make a loss on this? This looks like an accounting loss and I don't care about it. So therefore, from an accounting perspective, I would say this makes no sense to income tax. I am going to disallow. Are we clear on this? Be very careful about this, people. An asset used for scientific research will generally not have a cost of asset itself. When it does not have a cost of asset, whatever money you sell for is always going to be a profit to you. You can never make a loss on the transaction. So this entry does not make sense. I'm going to add it back. Chalo, very good. Next question says the opening stock and closing stock of the finished goods were undervalued by 10%. Opening stock was 14 lakh 50, closing stock was 15 lakh 58. This was shown. This is the most important part. Understand, 14 lakh 50 and 15 lakh 58 is the value showing in the P&L. Now this value in the P&L is already undervalued number. Which means I need to find out what is the actual value on this. Keep that in mind. So looking at this, 14 lakh 50,000 is the undervalued number. Matlab 14 lakh 50,000 is the 90%. How much is the 100%? That is what you need to check. So help karo, 14,50,000 divided by 90 percentage is gonna give me, oh wow, weird number. Yeah, weird number. It says 16,11,111. Yes or no? So my opening stock should have ideally been 16,111, which means my differential number is how much? My differential number is 1,61,111. This is what my undervalued opening stock is. Similarly, coming to closing stock was 15,58,000. If my closing stock was 15,58,000, that was 90 percentage. How much is 100 percentage? Help, 15,58,000 divided by 90 percentage. Answer has come to 1,73,000. Oh wow, yeah, it comes to 17,31,111. Yes, with this number as 17,31,111, let's find out what is my differential number. My differential number will be 1558 000. Answer is 1,73,111. Let's find the difference of this, people. What is the difference of this? Difference is 1,61,111. Answer is about 12,000 rupees. Answer is about 12,000 rupees. Now, if you understand this carefully, opening stock was less by 1,61,000, which means this I should have minused, because if I add more opening stock, my profit will come down. However, on the right side, 1,73,000 is the closing stock which is undervalued. If I add this closing stock, my net profit will increase. So this was supposed to be added. Net effect, what is happening? I need to net effect add 12,000 rupees, and that is what your answer is. So the answer to this is, I'm going to add 12,000 rupees to where, people? I'm going to add 12,000 rupees to my PGBP statement. A simple accounting rectification. This has nothing to do with income tax. This is a pure accounting mistake. Clear? Chalo. Next one. It says salaries and wages is including the following. Look, no, it is including the following. Including matlab this is there in P&L. If it is there in P&L, I will ask a question. Should it be there? If yes, ignore. If not, I will disallow. Keep that in mind. It says, I have contributed 20% of the basic salary in NPS under the scheme 80CCD regarding salary paid to employee of Mr. Ramesh, who has withdrawn basic salary of 5 lakhs and DNS allowances DNS allowance is 40%. 50% of DNS allowance is forming part of salary. People, before even I answer this question, I want you to mark this as an LDR adjustment, because this adjustment is where most of the students will end up making mistakes. I want you to realize something. Who am I? Who am I? I am here a person called as Ganesh, which means as Ganesh, I am going to pay NPS for my employee. Understand? I am going to claim NPS as an expense in my PGBP. Now, what mistake with students happen is, students look at the section called 80CCD and all, and they suddenly start moving to chapter 6A reduction. They start coming and saying, ha Rahul, chapter 6A, we have old tax regime, new tax regime, 10, 14 and all that thing. No. Understand, that section of 80CCD is for the employee, meaning when employee gets the money, he will claim that deduction. Nothing to do with you. You have nothing to do here. You are claiming an expense already in PGBP. Don't end up claiming this in PGBP and then moving to chapter 6A as well. That becomes double benefit for you. We are not here to do that. You can claim it as an expense. Employee will claim it as a deduction under 80CCD is the point. So be very, very careful on this as an adjustment of. Now, what is the PGBP rule here? PGBP comes and says, as an employer, when I pay NPS, I need to ensure that I don't pay more than 14% of the salary. That is what my understanding is. So I should have not paid more than 14% of salary. So we need to compute that. Let's check, people. What is my basic salary? My basic salary is rupees 5 lakhs. 5 lakhs ka I have contributed 20%, which means I decided I will contribute 1 lakh rupee. I decided I will contribute 1 lakh rupee as an employer. How much can I contribute? I can only contribute 14% of the salary, which means I need to contribute 14% of the basic salary plus DA forming part. So look, no, what is my basic salary? My basic salary is rupees 5 lakhs. My DA forming part should be how much? My DA forming part is 20%. How, Rahul, 20 percentage? It is 40 percentage of 50 percentage. So 40 percentage of basic salary, 50 percentage is forming part. So it will be 20 percentage. That means my total salary is 6 lakh rupees. So I could have contributed only 14 percentage of 6 lakhs. How much am I contributing? I should have contributed only 84,000 rupees. I have contributed 1 lakh rupees. Yes, I should have not contributed 1 lakh rupees. I should have only contributed 84,000 rupees, meaning I have extra contributed 16,000 rupees, which is to be disallowed. I hope you are clear on this, people. Be very, very careful about this. Multiple levels of errors can take place. Error number 1, you start moving this to 80 CCD, start claiming deductions. No. Error number 2, because you saw 20 percentage of basic salary, if you say, Rahul, extra 6 percentage I paid, no, it is 20 percentage of basic. You are permitted to pay 14 percentage of salary. Difference between salary and basic is very important. So don't end up doing 6 percentage of 5 lakh rupees, not the right answer. It is to be calculated separately. 1 lakh to be calculated separately, 14 percentage of salary to be calculated separately, and then the differential disallowance takes place here. Careful about it. Yes, chalo. Next one, some of the employees opted for retirement under voluntary retirement scheme. A sum of 3,40,000 was paid to them. Notice, people, when it comes to VRS scheme, we have discussed about it. VRS schemes case allow over 5 years, which means I should have allowed only 1/5 of this. Since I have put the full 3,40,000 in my P&L, I will come and say out of the 3,40,000, 4/5 is not allowed. Yes, so 3,40,000 into 4 by 5. 3,40,000 into 4 divided by 5 is not allowed as deduction, which means I will have to disallow 2,72,000 in my P&L. I will have to disallow 2,72,000 in my P&L. Clear? Yes, chalo. Next one says, interest on loan includes interest paid at 15 percentage per annum on a loan of 12 lakh rupees, which was taken from State Bank of India on 1st September 2020, 1st May 2023 for purchase of a new electric car for 15 lakh rupees. The car is used for personal purposes. Here is where the answer is over. The moment you said that the car is used for personal purposes, then the interest which you paid on the loan also becomes the personal expense, and therefore you will have to disallow the complete expense of. So let's disallow the complete expense. What is the complete expense here? The expenses amount of 7,50,000, correct? Yes, so 7,50,000 is there, so I'm going to disallow the full 7,50,000. I'm going to disallow the full 7,50,000. Now, I also want to pay attention to a few other things. While it is not important here, but be careful. In case this question would have said that the person is going for ATR. If he's going for old tax regime, you would have to keep in mind that there is something called electric car benefits. We have a section called 80EEB. 80EEB comes and clarifies that when you have taken a loan for an electric car, whatever interest you pay can be claimed as reduction to the extent of 1,50,000 rupees. Here, unfortunately, I am going for default tax regime. When I am going for default tax regime, that has nothing to do with me, which means I will ignore that adjustment of. Clear? Chalo. Next one. Depreciation allowable as per income tax rules is 4,50,000, but during calculation of such depreciation, the following addition was not considered. They forgot to consider this. What? Motor car purchase for 3 lakh rupees for supply of finished goods to dealers on 28 or 25th August 2025. So I have a motor car which I have used for my business operations. Forgot to claim depreciation on it. Let's do it one by one. First, let's claim this depreciation off, which means I'm going to claim 4.5 lakhs as a depreciation in my P&L statement. Yes, why, Rahul? Because I've already disallowed the normal depreciation. Normal depreciation of 617 has been disallowed. Now coming to the next one. I have a motor car purchase. I'm going to claim depreciation at the rate of 15%. So which means it's going to be 3 lakh rupees at the rate of 15%. Answer gives me what? 3 lakh rupees into 15%. Answer gives me 45,000, which means I am going to claim another 45,000 under my PGBP statement. This is what my answer is. Clear? Yes. Now, two things which you have to keep in mind. One, Rahul, what is this? Why are you claiming for the full year? 15% should be proportionated. No, August only I bought it. So from August you should proportionate. Hey, we are in income tax, not in accounts. We don't follow the concept of nonsense of doing proportionate and all from August. My rule is very simple. If you are going to put to use the asset before Gandhi Jayanti, I will claim full depreciation. If it is after Gandhi Jayanti, I am going to claim half depreciation. That is what my statement is going to be. That is how I am going to work with this. So don't come and give me that kind of idiotic accounting logics. Yes, don't give me those kind of stupidity, people. I don't accept that. Clear? Chalo. Next, an asset was purchased for 6 lakh rupees on 23rd July 2022 for conducting scientific research, and a deduction under section 35 was claimed on it. See, I did claim the deduction under section 35 for it, which means that that asset now cost of acquisition is 0. This asset was then sold on 5/9/2025 for 4 lakh rupees. That is why, people, if you notice, asset was purchased for 6 lakh, sold for 4 lakh. They decided to book a 2 lakh rupees ka loss. Now, this may make sense from an accounting standpoint, not from an income tax standpoint, because from an income tax standpoint, when I bought the asset for 6 lakh rupees, I have claimed full deduction of 6 lakh rupees on it. Today, when I'm selling the asset, the cost of acquisition is 0. The sale consideration is showing 4 lakhs, which means I now have a balancing charge. A balancing charge of the complete rupees 4 lakhs will be taxed under the head PGBP. Clear? Keep that in mind. Next, administrative expenses are including expenditure of 1,75,000 paid to a research association under section 35. Out of the 1,75,000, 50,000 was utilized towards purchase of a land. Now, this is where you will end up making a lot of mistakes in exam, because this is one of the most favorite adjustments of ICAI. What is happening? Normally, you have learned, people, that when it comes to scientific research, any donation that you give for scientific research is allowed as a 100% deduction. But you need to know the last line. Look at the last line. The last line comes and says that the person is wanting to pay tax under DTR. When you are paying tax under DTR, donations are not allowed. If you make a donation to scientific research, it is fully disallowed. It does not matter whether it is given for what reason. And therefore, in this question, I don't care. I'm going to look at this scenario and I'm going to say disallow the whole 1,75,000 because I am following default tax regime. Now, if it was an alternate tax regime, you would have claimed this, you would have ignored this adjustment of, because this full 1,75,000 is already there in P&L and should be there in P&L. I would have ignored the adjustment, but it is getting disallowed because it is under DTR. Clear? Keep that in mind. Next. Last question, people. It says he received an amount of 3 lakh rupees from a debtor which was written off as bad debt in the year 1920. The amount which was recovered from the debtor which was written off as bad was 5 lakh rupees, out of which the tax officer had only allowed 3 lakhs as deduction in computing the total income. Look, this is an adjustment which I have discussed in class also, and I've told you that this is a very, very favorite adjustment of ICAI. You need to understand something. Question says, I had proposed to claim a bad debt of 5 lakh rupee. I went to income tax department and said, sir, I want a bad debt of 5 lakh rupee. But income tax department said, no, I will only give you 3 lakhs. At this stage, I went to income tax department and said, sorry sir, if you want to give me only 3 lakhs, I'm going to keep this in my memory. I'm going to keep this in my mind that 2 lakh rupees ka deduction you did not give to me. I'm going to keep this in my mind. Today, how much have you recovered? You have recovered 3 lakh rupees in your hand, which means now you will go to income tax department and say, sir, my memory tells me that you in that year did not allow me 2 lakhs ka deduction, which means I have technically already paid a tax to you for that 2 lakh rupees. Once again, I have technically already paid tax to you for that 2 lakh rupees. Because I've already paid tax to you for the 2 lakh rupees, I'm sorry, I am not going to pay you tax on that 2 lakh once again. Which means in this 3 lakh rupees, I'm going to come and tell, in this 3 lakh rupees, 2 lakhs pay, I already paid the tax and therefore I am not paying tax on it. The balance 1 lakh, if you want, you can have it. I don't have a problem. But the 2 lakh rupees, I'm definitely not going to give it to you. By that logic, people, look at this. This 3 lakh rupees is sitting in my P&L. Should it be there in my P&L? No. I should have in my P&L only 1 lakh rupee. I don't need to have 3 lakh rupees because in that 3 lakh rupees, 2 lakhs is already paid off in the past years. So I am going to come and tell that in that 3 lakh rupees, 2 lakhs is already paid to the department. Only 1 lakh should have been there in the P&L. Since 1 lakh ke upar extra 2 lakhs is there in the P&L, I will have to reverse that much income. So in this question, what I'm going to do, I'm going to simply reverse 2 lakh rupees. I'm gonna simply reverse 2 lakh rupees and this is how the answer will look like. Yes, a very, very critical adjustment. I have written notes on this in the class also, people. I hope you can match it along. Please make sure that you have this properly done. Clear? Yes, good. With that is what the question looks like. I think we have written all the adjustments of people. So from my perspective, I think if I look at the heads of income, there is only 2 heads of income. One is PGBP and one is lottery winnings. Lottery winnings head of income will have that number. Taking tax liability is very simple. Take the incomes 4 lakh, 8 lakh, 12 lakh and all that stuff. Make sure that the winnings is also taken into 30%. When you compute tax liability, be sure to claim the credit off. Yes, be sure to claim the TDS credit of the winnings. So which means after you compute tax liability, there will be a line which will come and say minus TDS credit of 30%, the 35,000, whatever number that was. Yes, so that number is what you have to claim as credit and then report the net tax payable. Net tax payable. Clear enough to go? Yes, careful there. Any doubts, my friends? Clear? Chalo. First question, 30 minutes it took, no problem. We are doing it at a good pace, people. I hope you are understanding each and every question. That is why I told you, no, people, it will take time for me to complete this, but we will do it patiently, we will do it nicely so that you understand every single thing. Clear? Chalo. Next one. Question says, Mr. Brajesh is setting up a unit in SEZ in the May 2018. So I am a person who's going to set up an SEZ unit in 2018. The total turnover, export turnover and net profit for the data is given as 120 lakhs, 45 lakhs and 7.5 lakhs. Out of the export turnover of 45 lakhs, only 40 lakhs was received in convertible foreign exchange on 30th September 2026. We have discussed this in 10AA, people. 10AA mein what we discussed? We spoke about the fact that when it comes to 10AA, it is net profit into ETO by TTO. When you take ETO, take only those kind of turnovers which is received within the due date of 30th September. 30th September kula, if you receive it, then only we will consider it. Otherwise, we are not going to consider it. Yes? Chalo. During the previous year 25-26, Rajesh has commenced the business of warehousing facility for storage of food grains. Net profit of the business is given as 8,50,000 rupees. I am in the business of storage of food grains. Storage of food grains make me eligible for section 35 AD. Like business comes into picture. The net profit is given to you as 8,50,000, which is my starting point. Datas are given to you. The following items are debited to P&L account. First item says personal drawings. I have put my personal expenses into my P&L. Can I do that? No. Therefore, disallow. Next, advance income tax paid. Income tax says any tax you pay under income tax will not be allowed as deduction. Therefore, disallow. Next, purchase of warehouse building for 10 lakh rupees on 10th June 2025 for the purpose of storage of food grains. I am having this in my P&L. Can I have it in my P&L? Yes. 35 AD section comes and says that any expenses you incur, whether revenue or capital, can be claimed as 100% deduction in the year of purchase itself, which means this I am going to simply ignore. I am not going to do anything about it. I'm going to ignore because it is there in the P&L already. Look carefully. The following items are debited to P&L. It is there in the P&L. Don't end up claiming it once again. That will become double deduction. Yes? Chalo. Next, the following items are credited in the P&L. It says interest on savings banks account with post office to be removed from my PGBP, but to be added to IFOS. But because this is post office, we have discussed post office gets a deduction of rupees 3,500. Post office gets a reduction of rupees 3,500. So what will you do? Take remove from PGBP, add to IFOS, remove 3,500 under OS chapter. Also remove 10,000 under TTA. Also remove 10,000 under section 80 TTA. Post office Puerto Rico, we have discussed all these things, people. When it comes to interest on post office, you have to be extremely careful. There are many adjustments in it. First, when you take it to IFOS, you have a 3,500 deduction under IFOS itself. Second, because it is interest on savings, you can claim your 80 TTA of 10,000 rupees as well. So be very, very careful on that as an understanding. So these are all the adjustments you have to do. You have to claim PG, you have to reduce it from PGBP, add it to IFOS, claim an expense of 3,500 under OS and claim a deduction of 10,000 under 80 TTA. Be very, very careful of that. Yes, chalo. Next one says interest on fixed deposit with SBI. Again, remove from PGBP and add to IFOS. Right now, people, I don't know his age. Because I don't know his age, I am going to assume that the person is a normal citizen. If he is going to be a normal citizen, then I don't care. In that case, I'm going to take the SBI income as it is, and I'm going to take the fixed deposit as it is without allowing 80 TTA, because 80 TTA is only given on savings account. Dividend from Indian companies, very simple. Again, take out of PGBP, take it to IFOS. That is what the understanding is. Yes, chalo. Next, Mr. Brajesh is also a working partner in Neil Kamal Associates, a partnership firm. Mr. Brajesh has contributed 15 lakhs as capital in the firm. I have given capital of 15 lakh rupees. Further, partnership deed authorizes a payment of interest of partners of 13% and also a payment of remuneration to the partners of 20,000 rupees. The whole of the remuneration is allowable as deduction to Neil Kamal Associates. Here is where you have to be careful. This is something I asked you to mark as LDR in my class as well, people. Understand, from an exam question nowadays, ICAI is not testing you from the partnership firm. but as testing you as a partner in a partnership firm. So you have to keep that in mind. By that logic, people, what and all is to be kept in mind. One, when it comes to payments from the partnership firm to the partner, I will only tax what partnership firm can claim as deduction. In this conversation, if you notice, I am first receiving interest on capital. Now, rules of 40B comes and clarifies that you can only claim an interest on capital up to a maximum of 12%, which means partnership firm could have only claimed 12% deduction. If firm can only claim 12% deduction, I will also tax only 12% in my hand, which means by that logic, I will come and say, I am supposed to tax only 12% of the 15 lakh rupees. So what is the number? Tax what? 15 lakh rupees at the rate of 12%. Answer should give me 1,80,000, I think. Yes, answer should give me 1,80,000. Now this 1,80,000 will be taxable under the head PGBP for me. Yes, now this is where students end up getting confused, people, because they remember the provision that the interest on capital is 12%, but then they start disallowing things. Hey, here I am not the partnership firm, I am the partner. Partner cannot disallow anything. Firm is the one who claimed the expense. So firm will disallow, nothing to do with me. I will simply tax the 12%. Next one, when it comes to the salary, what is the question saying? Question itself is saying that the whole salary was claimed by the firm. If the whole salary was claimed by the firm, I am definitely going to tax it in my hands, which means 20,000 rupees at the rate of 12 months. I am going to tax 2,40,000. This is also going to be taxable under the head PGBP. This is also going to be taxable under the head PGBP. Clear? Yes, chalo. Next one. Mr. Brajesh has also paid a premium of 60,000 on the life insurance policy in the name of her married daughter. Policy was taken on 1st October 2019. Sum assured being 5 lakh rupees. I have taken a policy for my kid. If I am taking a policy for my kid, that goes into ATC. So I can claim a deduction under section ATC. How much can I claim, people? If the policy is taken after 2012, I can maximum pay only 10%. Sum assured is given as 5 lakh rupees. Payment has been made as 60,000 rupees. I could have only made a payment of 50,000 rupees. So I will put 50,000 rupees as my claim, and this claim is going to ATC. This claim is going to ATC. That is what is going to happen. Then the question says compute the total income and tax payable under default tax regime and a normal tax regime. I have default tax regime coming into picture. I have normal provisions coming into picture. Let's answer whatever is pending off. I have not completed my answer on what is the 10AA deduction. So let's take that into consideration. First, 10AA, what am I going to do? I'm going to first add whatever income I made. Whatever income I made income of 7.5 lakhs. So that 7.5 lakhs is going to be taxed under the head PGBP. Is going to be taxed under that PGBP. Next, I'm going to say I'm going to claim a 10AA deduction. How much 10AA deduction I can claim, people? I can claim 7.5 lakhs into 40 lakhs is what I received out of 120 lakhs. So I received 40 lakhs out of 120 lakhs, which means 1/3 is what I can claim as deduction. So it is 40 lakhs into 1.5, sorry, one second. So it is 40 divided by 120 into 7.5 lakhs. Answer is coming as 2.499, which is 2.5. But notice carefully that this project was set up in 2018, and if the project was set up in 2018, SEZ says only for the first 5 years you can claim 100% of the export profit. For the balance year and all, you have to claim only 50%. So this is also getting divided by 2. Answer is coming as 1.25 lakhs. Yes, so 1.25 lakhs is what is the deduction which I'm going to claim under 10AA. Is what is the deduction which I'm going to claim under 10AA. I hope you're making sense on this. Yes. So be very, very careful on the format template, people. The 7.5 lakhs will be added to the PGBP statement. All these adjustments will be made in the PGBP statement. Then you will have your OS statement. After you go to the OS statement, you will complete your chapter 6A deduction and then go to what is called as 10AA deduction. That is how you will claim it. However, notice carefully, here is a problem. Here is a problem. The problem is in this question, after all these computations of, you need to also check as per DTR scheme. So let me do one thing. I'm going to change all my DTR adjustments by marking it in red. What and all is not allowed under DTR. I cannot claim this under DTR. I cannot claim this under DTR. So DTR means this will get denied. This will get denied. Next, when it comes to DTR, I cannot claim what is called as a purchase of warehouse. So when it comes to purchase of warehouse, I will have to make an adjustment for DTR. What adjustment will I have to make for DTR? I will come and say that if I am under DTR scheme, then under DTR scheme, I will have to disallow this 10 lakh rupees as a expense. But I can claim depreciation on this, which is going to be 1 lakh rupees for the purpose of PGBP. For the purpose of PGBP. So this is what is going to happen. So this is my DTR change. This is my DTR change. Clear enough to go? What is going to happen, people? DTR basically comes and says when you have any kind of person who's going to be into 35AD, 35AD deduction will not be allowed to you accordingly. You cannot claim 35AD deduction, but you can claim your normal depreciation. That is perfectly fine. Next, when it comes to this section, people, interest on savings, can I claim my 80TTA ka deduction? No, I cannot claim my 80TTA ka deduction because chapter 6A itself has been denied to me. Next, when it comes to the other parts, if I notice here, I have to I have to claim an ATC deduction here. So this will also get denied to me. This will also get denied to me, and that is how the computation will look like. Clear? Yes, this is a very, very important thing for you to keep in mind. If you have done it till here, great. If you have done it till here, great. But unfortunately, this is not the complete answer also. What you need to realize, people, is question is asking you for tax payable as well. And when the question asks you for tax payable under normal provisions, please note that when you have claimed a deduction like 10AA or 35AD, huge deductions like these have been claimed, you need to mandatory check for AMT. You need to mandatory check for AMT, which means here what you will do, people, you will come and say when I'm checking for AMT, I will take the total income as per normal provisions, the one which we computed above. But when you're checking that, after that you have to disallow two items. Your 35AD claim and your 10AA claim will get disallowed, and you will allow the depreciation on 35AD. Find a number, and on that number you have to do 18.5%. So please make sure that you check for AMT at the rate of 18.5% before you make your final judgment. Before you make your final judgment, in which case, people, the tax liability will be what? My option regime will be that I will say the optimal answer is the tax payable is what? My tax payable is going to be normal or AMT, whichever is higher, versus DTR, whichever is lower. That is how you have to prepare your answer and get the final judgment. Get the final judgment. That's what the statement is. Clear enough, my friends? Yes, so be very, very careful on this question, people, because this question has multiple elements here. A very lengthy question if you come and ask me. It looks like a small question, but actually a very, very lengthy question for you to keep in mind. So be extremely cautious about this question. Yes, chalo. Good. Let's proceed on forward, people. We are moving into question number 4. Question number 4 is going to be a little tricky, so be very careful about this question. Question says, Mr. Vivek is an advocate, which means I have an advocate coming into picture, and this advocate is going to furnish you the receipts and payments account for the current year. The moment I see receipts and payments, it means I have been given what is called as the cash book. So I have to prepare the statement right now. I don't know what is my net profit. I need to prepare it. So here we are not going from reverse scenario, we're going from top down, which means if I can claim that as an expense, I will put it as minus. If I can't claim it as an expense, I will ignore that adjustment accordingly. Keep that in mind. Ignoring this statement, let's read further. Bottom line comes and so question says, you're required to compute the total income and tax liability of Vivek, assuming he opts out of default tax regime, which means the person is going for ATR. The person is going for ATR. With that understanding is what we're going to prepare the question, people. First things, unfortunately, because a question like this has come, you will have to prepare the statement first. So let's prepare the net profit statement. First, looking at the items one by one. Item from the left side, it says opening balance cash at bank is 80,000. I'm going to simply ignore it. I don't care. I don't care. Cash balance of 80,000 is not relevant to me. Next, fees from legal services is my income. So I'm going to add it to my PGBP statement. Next, motor car loan from HDFC Bank is not relevant to me because this is a loan taken. It's not my income. I'm going to ignore. Next, sales receipt of 5275 listed equity shares sold on 31st March 26 is my capital gains. Is my capital gains. Clear? Yes? Good. On the right side says staff salary and bonus to clerks is an expense under PGBP. Other general administrative expenses is an expense under PGBP. Office rent is an expense under PGBP. Life insurance premium where sum assured is 5 lakh rupees is 49,000 to be claimed as deduction under ATC. This is life insurance. Yes. Next, motor car acquired in Jan 2026 by way of NEFT, 9,50,000 is there. Can't do much about it, people. 9,50,000 ka depreciation is what I can claim as deduction. So when have I purchased it? I have purchased it less than 180 days. This is less than 180 days, making it eligible only for half depreciation. So what will I do? I will say claim 9.5 lakhs ka 7.5 percentage. Yes, so let's take 9,50,000 into 7.5 percentage. Answer gives me 71250. Answer gives me 71250 for me to claim under PGBP. Clear? Good. Next one. Books bought by way of account paycheck in the month of May, June and September 25. All are annual publications. People, all assets have been purchased before Gandhi Jayanti, and therefore I can claim 100% deduction on this, which means I will claim 40% rate of depreciation. So it is 80k into 40%. Answer is 32,000. So 32,000 can be claimed as deduction under PGBP. Next, computer which is acquired on 1st November 25 by professional use. Payment is made by account paycheck. Again, it is after Gandhi Jayanti, so I can claim half depreciation. Computer is 40, claiming it 20, which means I'm going to claim minus 52,000 at the rate of 20% depreciation. What is the number? The number is 52,000 into 20%, which is 10,400. So 10,400 is my PGBP claim. Yes. Next, domestic drawings is 6,23,000. What is domestic drawings? It means personal withdrawal. Personal withdrawal is not an expense. Ignore adjustment. Next, motor car maintenance is 72,000. Fully claimable under PGBP. No problems here. Public Provident Fund is a claim under section 80C. But I wanted to notice carefully, people, that the 80C claim has exceeded more than 1,50,000 rupees. I have exceeded the claim of 1,50,000 rupees, which is not a good idea, in which case I am going to claim only part of it. I am going to maximum restrict to 1,50,000. I am going to maximum restrict to 1,50,000. So I am just writing a note here. It is maximum 1.5 lakhs. Maximum 1.5 lakhs. Clear enough to go? Yes, so keep that in mind. That gives me the last one. It says closing balance, which is not relevant to me. Cash balances are ignored off and not important adjustment. Clear? This is how you have to prepare your P&L statement, people. So first you have to prepare your P&L statement and get the net profit. After net profit, you can start making adjustments from these information. So let's look at this carefully. It says listed equity shares on which STT was paid was acquired on August 2016 for 1,21,000. Fair market value is given as 80 per share. People, 112A assets acquired before 2018 has a specific rule. What is the rule, if you can remember for me? The rule is FMV or FVOC, whichever is lower, compared with cost, whichever is higher. So looking at this, people, my FMV is going to be 80. So it is going to be 80 versus, let me change it like this. My reduction cost of acquisition for section 112A is going to be what? Is going to be 80 versus what is my sale value given? My sale value is 5,95,000 divided by 5275 shares. Answer is going to be 112. Yes, so it is 80 versus 112, whichever is lower, versus actual cost, which is what is it? 1,21,800 divided by 5275. Answer is going to be 23 something. Answer is going to be 23 something. So 23.09, let's say 23.09, whichever is higher, which means the answer is 80 per share. The answer is 80 per share multiplied with what is the number? Multiplied with the shares are 5275. 5275. So what is it? It is 80 into 5275. Answer gives me 4,22,000. 4,22,000, which means now I know my sale value, people. My sale value is 5,95,000. My cost of acquisition is 4,22,000. I can find my 112A. So it is 5,95,000 minus 4,22,000. Answer hits to 1,73,000. So what is going to happen? My cost of acquisition is going to be 80 per share, and therefore my 112A income is going to be 1,73,000. Clear? Yes, good. Next, motor car is used for both personal and official purpose. 1/3 of the motor car is for personal purpose. No interest on car loan was paid during the year. Now, look at this carefully, people. When it comes to these kind of questions, you have to be very careful. Motor car is one of the most trickiest adjustments which you always have to keep in mind. Notice carefully that the question comes and says motor car is used for personal purposes also. Now, I have already claimed all the expenses in the P&L. So all the expenses have been claimed off. My depreciation and everything has been claimed off, which means after claiming this depreciation, I'm now going to disallow some expenses. What am I going to disallow? When I have motor car for personal purposes, I'm going to find out where and all I've seen motor car. First, left side, there is a motor car loan. Relevant? No, nothing to do with the relevant loan, people, nothing to be done about that. Right side, I have a motor car on which I have claimed a depreciation. So I have claimed a depreciation of 71,250. But should I have claimed a depreciation of 71,250? No. I cannot claim depreciation to the extent of 1/3 on this. So 71,250 divided by 3, 23,750 now has to be disallowed. Yes, so I'm going to disallow 23,750 worth of depreciation under the head PGBP. Also, I am now going to disallow one more thing. If you notice, the question also had something called motor car maintenance in this question. Yes, so which means I now need to also disallow motor car maintenance. If you notice, motor car maintenance was 72,000. 72,000 is for the full car. So divided by 3 will give me 24,000. So I am now going to disallow another 24,000 as a motor car maintenance. As motor car maintenance, and that is what the adjustments will be. Anything else, people? No, these are the only two expenses which you have, so ignore keeping all those two expenses in mind. Now coming to the point where they come and say no interest on car loan was paid during the year. People, when it comes to these kind of questions, you have to be very, very careful. Just because they have said that car loan interest is not there, don't start coming and saying we'll follow accrual accounting and claim the expense. Notice somewhere on the bottom you will find that the answer question comes and says that the person is following cash system of accounting. It will come eventually. I think it should have. Yes, see, notice here, the person is following cash system of accounting, which means I'm going to ignore the fact that I have not paid any interest in the current year. That has nothing to do with me. Yes, so I'm going to say ignore all accruals. Clear? So be very, very careful about this as an adjustment of, people. Next, Vivek has purchased a flat in Jhansi for 35 lakhs in July 2017, cost of which was partly financed by a loan from Punjab National Bank of 25 lakh rupees, his own savings of 1 lakh rupees and a deposit of Repco Bank of 9 lakh rupees. The flat was given to Repco Bank on a lease for 10 years at 35,000 rupees per month. Further, Vivek has paid the following expenses in respect of the flat. He has paid 8,200 for municipal tax, house insurance for 11,000 rupees. As per the certificate issued by Punjab National Bank for the financial year, he's paid 1,80,000 towards principal and 2,01,000 towards interest. A lengthy adjustment, all part of HP topic. Yes, so it's going to come in completely into HP topic. So let's understand this HP topic carefully. I have purchased a flat 35 lakhs is my loan. Doesn't matter. Financed it from a bank, okay. Financed it from own savings, okay. Financed it from deposit, nothing is relevant. What is relevant is I have sold it for a price of 35,000 per month ka rent. So now I'm going to compute my HP. What is my HP gonna be? My HP is gonna be 35,000 for how many months? 12 months. Let's take 35,000 for 12 months. Yes, so 35,000 for 12 months will be taken, minus what is going to be my municipal tax. Municipal tax is rupees 8,200. Yes, minus what is going to happen. I don't have anything else, people. So therefore, this will be calculated at the rate of 70%. Why, Rahul, 70%? Because you get 30% standard deduction. Let me put it the other way around. So I can simply come and say minus 30% standard deduction. Again, another minus is my 2,01,500 ka interest on loan. 2,01,500 ka interest on loan. Now, if you are thinking about it, saying, Rahul, what the hell? 2,01,500, how are you claiming? This is a loan. You should have only claimed 2 lakh rupees as deduction. Why are you claiming 2,01,500? Go back and read HP topic mein. If you have let out property, everything is allowed as deduction. There is no cut-off limit of 2 lakh rupees. 2 lakh rupees cut-off limit is for SOP property. Be very careful. Yes, so which means I will claim the full 2,01,500 as an income under house property. No, the house insurance is anyway not relevant. I'm not going to take it into consideration. Coming to the principal part, people. The principal part technically is 80C. There's technically 80C, but I'm going to ignore as 1,50,000 is already considered. I have already found 1,50,000 worth of claims here itself. So there is no point of claiming this 1,80,000 once again. Ignore information, completely irrelevant. Yes, next. He earned 1,20,000 in share speculation business and lost 1,20,000 in commodity speculation business. Losses can be set off. So what will you do? You will add 1.2 lakhs into PGBP statement. You will claim 1.2 lakhs as PGBP loss, but you will carry forward 60,000 rupees for set off in the future year. You will carry for set off for future years. Why, Rahul? Because when it comes to speculative loss, you can only set off against speculative profit. You don't have any speculative profit more than 1,20,000. The balance 60,000 has to be carried forward. Very simple. Yes. Next, Vivek received a gift of 21,000 each from 4 of his friends. Each from 4 of his friends makes it 84,000 rupees. 84,000 rupees will get added into IFOS statement. 84,000 will get added into IFOS statement because the value of the gift received is more than 50,000 rupees. Keep that in mind. Next, he donated 1,21,000 to PM Cares Fund by way of bank draft. Claim 80G. Claim 80G. So what am I going to do? I'm going to say claim 1.21 lakhs under 80G. Yes, now I am cramping this up, people, but this is more for your understanding because you might have already done the chapter off, so you should already know these things. So you don't need to look at my beautiful statements. Just make sure that you get the right answer. Next, last one says he donated to a registered political party 3,50,000 by way of check. Claim 3,50,000 as 80 GGB and GGC. Yes, so I can claim 3,50,000 under 80 GGB. Clear? Yes. And finally, the question comes and says he's following cash system of accounting. Cost inflation index is not relevant because 1128 does not have CII. Yes, so 1128 does not have CII, so it does not really matter. Yes, you are required to compute the total income and tax liability of Vivek for assessment year 26-27, assuming he's opting out, and this is what the answer looks like. Now, I believe this is coming from your study material. This is one question which is there in the study material, so they've copy pasted that for MTP. But yes, a lengthy question, definitely very lengthy question. Too many adjustments, too many logics, too many issues you can go wrong on. So yes, be careful on these kind of questions. I hope you understood every adjustment one by one, people. Cash accounting is something very complicated if you don't get the right answers. So be very, very careful about it. Clear? Yes, so very good. We are moving on forward to the last question, people. I'm going to stop at question number 5. We're going to do the balance question in the next video. Yes, chalo, let's look at question number 5. It says Mrs. S.C. Bose is age 62 years. Matlab person is a senior citizen. The person is a widow of a public sector employee who died during the service in 2001. She earns an income of business of running flower bouquet shop at Kolkata and income from royalty from writing books of science and sells in India and abroad. So she has two incomes. One is business of running flower bouquet and another income from royalty of writing books. The data says that the profit and loss for her is the current information. Looking at the last line. The last line comes and says you're required to compute the total income of SC Bose under default tax regime and under optional tax regime. I want both the logics. Now I want you to notice this carefully. Question is asking you only for total income. This is the mistake which happened in May 25 examination. Students ended up wasting too much time on this because students ended up computing tax liability and all. I only want total income, not the tax liability. Yes, sometimes it's important that you read the question very carefully. They don't want tax liability. They simply wanted what is the income statement, full stop. Yes, keep that in mind. With that understanding, people, let's read the question. Let's see if you're able to answer the question with me. What am I going to do? Same logic. I'm going to use my blue pen for all my ATR schemes. And then when I'm in DTR, I will highlight that in red highlights. Yes, so let's do that. It says by sales of bouquet flower, 36,75,000, normal business income, no problem. Family pension from PSU through banks. When I'm getting family pension, it is to be reduced from my PGBP statement, will be added to my IFOS statement. But notice carefully that when it comes to family pension, the rule is 1/3 of the family pension or 15,000 can be claimed as a deduction. So let's check now, people. 3,60,000 ka 1/3 if I do, answer comes as 1,20,000. Obviously 1,20,000 is way higher, so which means I'll claim 15,000 as a deduction under IFOS statement. So I will claim a 15,000 ka deduction under OS. under OS, but I can also claim a 25,000 rupees ka deduction if I would have gone under default tax regime. So what will happen? This 15,000 rupees will end up becoming 25,000 rupees under OS statement. Under OS statement. How can I make this better for you in presentation? Let me put it this way. I will do minus 15,000 rupees or 25,000 rupees under OS. How is it 25,000? I will claim this under DTR scheme. So under DTR scheme, it will be 25,000. Under normal scheme, it will be 15,000. A very critical adjustment for you to keep in mind, people. Be very, very careful about this. Next, it says buy royalty from California University for books sold, foreign exchange brought into India is 4,25,000. Now here is where you can make a choice, because on the line it says that she's earning income from business of royalty. I can assume that this is part of PGBP statement. If it is part of PGBP statement, I don't really have to worry about it. I can come and say this is part of PGBP statement. It's completely fine. Let it go. Let's not make any adjustment in IFRS. Let's keep it in your PGBP itself. Waste of time to move it to IFRS and all. Keep it here itself. Next, the dividend net of TDS is given to you. So which means what I'm going to do, same adjustment. I'm going to reduce this from PGBP fully. So which means I'm going to reduce the 4.5 lakhs from my PGBP statement. But when I add it to my IFRS statement, I need to add a different number. People, for those who remember dividends is TDS at the rate of 10%, which means this 4,50,000 is 90%. So divided by 90%, answer hits 5 lakh rupees. Answer is 5 lakh rupees. Clear? Yes, very good. Next one says interest on FDR. FDR is foreign depository receipts. So I have in FDR is fixed depository receipts. So 76,000 is going into FDR, which means I am going to take this into consideration. I'm going to reduce it from my PGBP. I'm going to add it to my IFRS statement. But here is the more critical part. Here is a more critical part. If you notice carefully on the top, the person is a senior citizen, and that person is a senior citizen only for alternate tax regime. Now, Rahul, why are you stressing on this? When you have interest coming from savings, fixed and all those things, you are eligible for what we call as 80TTB. Fixed deposits can claim a deduction of 80TTB, which means on this thing, I am now eligible for 50,000 worth of deduction under section 80TTB. Under section 80TTB, something for you to know and keep in mind. Something for you to know and keep in mind. However, like you all know, people, this is not eligible under DTR scheme. So under DTR scheme, this will be denied to you. Yes, keep that in mind. Very, very important. Next, I have a closing stock, not relevant information, PGBP, so let it go. On the left side, people, I have purchases, okay, opening stock, okay, salaries and wages, okay, expenses relating to books authored by her. Since I've kept the P&L, since I've kept the royalty in the P&L, I will also keep this in the P&L. I will not make any changes, so let it go. Expenses in connection with dividends, this is getting disallowed in PGBP. This is getting disallowed in PGBP. Now here is where the challenge starts. For those who know, people, when it comes to dividends, income tax basically comes and clarifies that when you have dividends, you can only claim one expense against it, which is interest. However, here they have not clarified what it is. It is only saying expense. Does not say what it is, which means I will assume that this may not be dividend interest. If it is not interest, I'm simply going to disallow in PGBP and I'm going to leave it as it is. I'm not going to make any adjustment on it. Be very careful. Now you can also write an alternate. You can write saying that Rahul, it will be eligible, saying that this is interest. If that is the case, you will have unnecessary time pass, people. What you'll have to do, you'll have to take 5 lakh rupees, and 5 lakh rupees ka 20% is the maximum you can pay, which means you can pay up to 1 lakh rupees. You have paid 12,000 rupees, you can claim full deduction. Extra efforts from your side, I would not suggest that. When they did not say it is interest, I will assume it is not interest. Very simple, straightforward. Yes, repairs and maintenance allowed as it is. Amount paid to IIT Chennai for scientific research. Here is where you have to be careful. When you have amount paid to scientific research, we just did this earlier also, people. ICI loves to test you on this, because when you have donations happening to scientific research, you cannot claim it as a reduction under DTR scheme. So this means this 35,000 rupees will get added to my PGBP statement only if I am following DTR scheme. How do I put it to you? Yes, so I'm going to rather put it like this. I'm going to say disallow 35,000 only in DTR. Only in DTR. Clear? Yes, very good. Next, 2 computers and other electronic items which are purchased on 1st December 25. Problem. People, this is my P&L statement. How on earth is someone booking asset into my P&L? It says computer purchase. Computer matlab I've purchased an asset. How did you put an asset into my P&L? Cannot put that, and therefore I'm going to disallow this 4,50,000 from my PGBP statement. From my PGBP statement. But because I'm disallowing it in my PGBP statement, this has now become an asset. If it has become an asset, can I claim depreciation? Yes. Let's claim depreciation. How much, people? It is on 1st December, which means it is after Gandhi Jayanti. So it is 4,50,000 into 20%. Answer hits as 9 lakh rupees. So I can claim 9 lakh rupees. 90,000 rupees, not 9 lakh rupees. I can claim 90,000 rupees as a depreciation under PGBP. As depreciation under PGBP. Clear? Yes, very good. Let's read the further lines. It says, purchase includes 2 lakhs relating to flowers and creepers directly purchased from a farmer in cash on 26 September 2025. People, my business itself is to run flowers, which means I have purchased stock in trade, and this stock in trade was purchased by cash. What is the problem? I cannot make a cash payment more than 10,000 rupees, but when I'm making this payment of cash to a farmer, I don't have a problem. Farmer co payment in agricultural produce is allowed as a complete expense, which means I will ignore this adjustment saying no problems as farmer is allowed in cash. As farmer is allowed in cash. Are we clear? Yes, good. Next one. Repairs and maintenance includes one-time deposit of 2 lakh rupees paid to electricity and water department. Okay, this is an adjustment which I think you have to be a little careful about. Question says the repairs and maintenance is including one-time deposit of 2 lakh rupees paid to electricity and water department. I had to pay this money to the water department as a deposit. When you say one-time deposit, it means I have not paid it for a continuous period. I paid it only for a certain amount of time, and therefore you need to make some choices here. Choice number 1, you can come and say it is a deposit made. Deposit made matlab I can get back this money later on. Issue number 1. If that is the case, then you should not have it as an expense. You can reverse it later on. Yes, so therefore it should be a balance sheet entry. Option number 2, you can come and say, since I've made a one-time deposit, it looks like a capital expenditure and therefore should be disallowed. Third, you can also come and say that this is 2 lakh rupees of one-time deposit to be utilized for a number of years, and therefore it should be amortized over the years. The only problem is in this question, it does not clarify what is the number of years, and therefore that third work will not work out. By that logic, if you think about it, I will come and tell you whether you call it as a capital expenditure or you come and say that this is refundable in the future, the answer remains the same, that you have to disallow this. Because of that, I am simply going to disallow this expenditure. Yes, now you can write whatever reasoning you want, both the reasonings will work out well, but at the same time, just make sure that you disallow the 2 lakh rupees. There is no opportunity that I can claim it as an expense because it's a one-time payment. Yes, that is what the reasoning is. Next, computers and electronics includes 1 lakh rupees paid for television and washing machines for our household use. Here is where the problem started. Notice, I have disallowed the full 4.5 lakhs. When I disallowed the full 4.5 lakhs, I ended up claiming depreciation on the full 90,000 rupees, which means I have made a mistake here. I cannot claim 90,000 worth of depreciation because the problem is 90,000 is a depreciation on all the assets. I cannot claim depreciation on the assets which are used for household purposes, in which case I will say depreciation is equal to 4.5 lakhs minus 1 lakh rupee at the rate of 20%. Yes, I will not claim depreciation on that 1 lakh rupee, and therefore it becomes 4.5 lakhs minus 1 lakh at the rate of 20% because the asset was put to use after 180 days and within 180 days, and therefore it is 3,50,000 into 20%. Answer gives me 70,000 ka claim. Answer gives me 70,000 ka claim. Clear enough to go? Yes, very good. Next one. Salaries and wages include salary paid of 2,40,000 to her illiterate brother. Reasonable salary as per market is 1,80,000. Market salary is 1,80,000. I have paid 2,40,000. 40A2 comes and says don't pay anything more than the fair market value, which means I will disallow the 60,000 rupees. I will disallow the 60,000 rupees. Now, I know students would be thinking about it in the back of their mind. Rahul, illiterate brother, no, which means basically this person is technically not even qualified to do anything. Why are you paying him that 1,80,000 also? Let's disallow the full 2,40,000. No, section never came and told you that you can disallow based on qualification. That is clubbing rules. Clubbing rules is a different conversation, and that is for spouse. This is a conversation where we talk about fair market value, and therefore I can only pay to the extent of fair market value. Only 60,000 can be disallowed. Now, second thing to be kept in mind is judgment like that is unfair from your side. Just because a person is illiterate does not mean he will not be working on anything. He does not have to be working on any kind of accounting or any kind of technical works, but there can still be works in your business which is not technical. Person is into flower operations. Flower operations matlab a person who can basically do basic gardening is also a good enough person. You don't need to be qualified for that. So don't make such erroneous statements and come and start disallowing 2,40,000. That makes no sense. Be smart enough to this. Yes, chalo. Next, last adjustments, people. It says she purchased a residential house for 1,10,000 rupees, of which loan of 75 lakh rupees was taken from State Bank of India. Accrued interest was 3,37,000 till 31st March 26, which was paid on 10th April 26. No principal amount and interest was paid by Mrs. Bose till 31st March 26. Ground floor of the house was used for shop and the first floor was used for her residential purposes. That is what the question comes and clarifies to you. Very simple. Question is coming and telling you that I have a house. Part of the house is used for business and part of the house is used for operational purposes. In that case, what am I going to do? I'm going to say I'm going to split my house accordingly. Yes, I'm going to split my house accordingly. I'm going to come and say some part of the house is going to be used for PGBP and some part of the house is going to be used for SOP. I think I am having a problem here. It says she purchased a residential house for 110 lakhs, of which loan of 75 lakhs was taken from State Bank of India. Okay. Accrued interest of 3,37,000 till 31st March 26, which is your previous year, was paid on 10th April 26. No interest and principal amount was paid by Mrs. Bose till 31st March 26. Ground floor of the house was used for shop and first floor was used for residence. Okay, fair enough. So what can we do, people? We can simply come and say that take the 3,37,500 rupees and this 3,37,500 rupees is going to be split into two. I'm going to take this as it is. So 3,37,500 divided by 2, answer comes as 1,68,750. Yes, so I'm going to take the 1,68,750 and we can claim it as an expense under PGBP. Next, I am coming to the 1,68,750 and I will claim it as an HP loss. And I will claim it as an HP loss. So which means I can take the 3,37,500 and I can take 1,68,750 for PGBP claim and I can take 1,68,750 for my HP loss. But because this is SOP property, your DTR will come and say sorry. Your DTR will come and say sorry. DTR will say I'm sorry, I'm not allowing this 1,68,750. The balance you can claim of the 1,68,750 for your business is perfectly fine. But the 1,68,750 for your house is not going to be allowed as reduction. Now, I am a little confused on one thing, people. The question is it there in the P&L or not? That is what I wanted to understand. Because it says I have taken an interest. Yes, so there is an interest component. Do I see the interest in my P&L? No, I don't see any interest in my P&L. So to that extent, I am not having a problem. I'm going to ignore this off and therefore I am going to assume that the full 3,37,500 was not there in my P&L and therefore I can claim the deduction accordingly. Keep that in mind. Next, she purchased an electric vehicle on 30th September 2025 for 25 lakh rupees for business purposes. Okay, electric vehicle, business purposes, all perfectly fine. I can claim depreciation on this. So let's claim depreciation, which is 25 lakhs at the rate of 15%. Answer is going to go 3,75,000. So I'm going to claim 3.75 lakhs as a depreciation under my PGBP. Final one says she sold 10,000 listed shares of SBL Limited for 11,66,000 on 11th December 2025, for which she purchased it on 8th for 2,65,000 on 16th August 2025. Purchase and STT was paid in the current year. This is a 111A. Yes, so I have 111A coming into picture. What is 111A, people? I'm simply going to take 11,66,000 minus 2,65,000. So 11,66,000. 11,66,000 minus 2,65,000. Answer is going to hit as 9,11,000. So I'm going to simply take 9,01,000 rupees and I'm going to tax it as section 111A income. I'm going to tax it as section 111A income, and that is what the statement is going to be. Any doubts on this part? Clear enough to go? Yes, this gives me the last adjustment, people. Question says compute the total income and give the answers accordingly. This is what the statement is. Don't start telling 111A 20% and all, doesn't matter. You are only going to compute total income here. Now, one thing I want you to notice carefully, people, and something which we have not discussed about yet is the royalty part. if you notice the royalty part, royalty is taken from California for books sold, and books are what? Books are for the purpose of science and for writing books of science, which means these are educational books. Now, when it is educational books, the question which then comes up is, can I claim the 80 QQB deduction? That is a question which you have to ask yourself. If yes, then I will get an additional deduction of 3 lakh rupees, because 4,25,000 is my income minus 75,000 is my expense. Therefore, 3,50,000 is coming in. I can claim up to 3 lakh rupees under my alternate tax regime. But can I claim that as a deduction is the question that you have to ask yourself. Think about it. And the answer is yes. People understand there is a difference between what we call as educational books for the purpose of schools and colleges and something called literary books. These are books written for science. These are actually books. These are fictional books, not fictional books, but maybe nonetheless, it is not basically those kind of books which are like study materials for your schools, and therefore it is completely fine. You can claim this as a reduction. It will be allowed as a deduction, and therefore to that extent, you should be very, very careful enough to understand that you can claim a deduction of rupees 3 lakhs under section 80 QQB. Under section 80 QQB. But again, the same thing, people, when it comes to deductions like these, you cannot claim it under DTR scheme. So you have to be careful to not claim it under DTR, and that is what the answer will look like. Yes, this is how the statement is. Now, if you're noticing it, this itself, people, too many adjustments going on, too many parallel things going on. So yes, again, like I clarified to you, question number 1 does become tricky at certain point of time. But let's also be cognizant of the fact that you are not going to lose marks everywhere. There are some adjustments which you outright can get right. No matter how hard you try, you will always get right. Cash expenses of farmers and all is not going to be a mistake you're going to make, which means there are adjustments, there are questions you can get right in question number 1. So I am not denying to you that question number 1 can become tricky, but that does not mean you should never attempt it. Give it a shot. Go forward, sit in the examination, sit and try some adjustments. At least out of 15 adjustments, if you're able to get 10, 12, okay, 5, good enough. At least 5 is worth it. Better than not doing it completely itself. The one misconception in the market is, Rahul, I see total income, too heavy questions, too difficult questions, let's skip it off. No, do not do that. You're losing marks. You're definitely losing marks. It's not worth it. Please try whatever you can. At least for the attempt of it, ICI will ensure to give you step marks for adjustments that you have, and you will get that extra marks. Trust me, that extra 2-3 marks can make an impact. It can change from 59 to 61. It can change from 39 to 41. That impact is important for you. You should keep that in mind, and you should do it properly. Yes. So I'm going to hold the video now, people. We are at 1 hour 15 minutes. We have completed almost about 5 questions. We have another 6 more questions to go, which we'll be doing in the second part of the video. I'll be giving that video also to you for your preparation times. But again, if you have not completed till here, then hold back, complete the balance questions, and then come back and watch this video. It will have a better suiting to you, so that at least when I am doing an adjustment and you don't get the same answer, you can mark saying that yes, this is what I did not realize, Rahul Bhaiya told me to realize. Let's keep that in mind so that we don't do this mistake for examination. That strategy will help you do much better in examination than simply looking at the question and discussing it along with me. I want you to try it first, then come back to me. It becomes a lot more easier. Clear enough to go? Yes, perfect. With that, people, thank you so much for listening to this video. Let's come back and discuss the balance topics off, and we'll complete it from there. Yes, until such time, take care. Bye bye. Happy learning.